interview was no decoy. It was raw dog. No dick.
GetCrack. Wake up, motherfucker.
Yo, 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 yo. All right, Sunday night. Orthodox Easter Sunday. Okay, so what we got here? Some noise. Couldn't close a deal. Guess the Strait of Hormuz is getting closed again. Shit. Oh man, it's double closed. Oh, you want taco? Jennifer Lopez says no taco, no taco. Sorry. I don't know. Tuesday is gonna be a taco. Fuck. What, dude? I can't keep up with this. Who cares? It's just noise. So like I told you guys, everything I do is just for the minimum trade. Just giving my 10-15% every other day. I get out. I'm not gonna risk it, especially over a weekend. Fuck that. Yeah. I mean, I could have got more on that SOXL if I held that longer, but fuck that. I don't care. It's not worth it. The risk reward is too bad. It really is. But I told you guys about getting into software, right? Right now, overnight, I'm looking at Palantir. I'm looking at CrowdStrike. I'm looking at what's the other one? Cloudflare, Palo Alto Networks. That Anthropic stuff. They keep beating down these companies because of Anthropic. Oh, they got the Claude version, whatever. Now they got the they got the new agent, right? Let's see. That was all about the news. That was all over the news on Friday. They pushed those guys down even more. They were like down 10, 20, 30%. I was like, whoa, these are getting real cheap now. So let me see. Anthropic. Oh, Fastly. That was another one. Fastly was down like a lot. Akamai. Yeah, that was down a lot. Let me see. So let me look it up. Anthropic. Agent. News, let's see, what was it? Okay, all right, let's see, what was this? Okay, down 13%. Akamai. Fastly down 18%. Cloudflare down 11%. What was that? Anthropic managed agents. Okay, and I think the Federal Reserve was talking to the Treasury Department, and they were saying something about they had a meeting. They were like, dude, this Anthropic AI is getting too good. We're getting worried now. So fuck. And there was another meeting after that. They were like, whoa, all this private credit to all these software companies are getting punished. So they're worried. They're definitely worried about AI in multiple ways right now, how it's disrupting all the So, are we going to expect some kind of crash that's coming outside of left field that's not related to Iran? And when would that happen? When would be the time that would happen? For now, I think I'm going to buy this dip for a trade, like I said, till June. And then from there, we'll see how it goes. See if things are going to crash even harder into October, which is probably what's going to happen. So that's it. Let's see. They're afraid it'll go rogue. Yeah, sure. Skynet, yeah, whatever, man. Trump advanced dump. And it's not. We have earnings coming up. It doesn't really matter. None of this stuff really matters. So don't worry about that. Okay. Oh my God. I can find this all over Twitter. You could just search AI, Anthropic, and everybody's just screaming and yelling. I just look at the charts. I don't really give a fuck. I just see where the hell things go. So perfect timing. So that I'm just more busy like planning out what I'm gonna do for the Substack here, what stocks I'm gonna put in, what price targets we have to look at to buy certain things. That's the more important business we're going into, because there's gonna be another dip coming. And it's time to buy. That's it. It's time to buy. Okay. And go long. I think maybe Friday was it for software. I'm not sure. I'm not sure. Okay, let me get this article up. Blah. Okay. Blah. Okay, good. Okay, you see this? Anthropic launches Oh, yes, all Friday. After it got slammed like on Taco Day too. Taco Day was already got slammed. It's just like, damn, this thing can't catch a break. This goes lower and lower and lower. Good. Keep selling. Keep getting scared. I really need to find like some good lows here to buy stuff up, huh? How about that? Okay, so Cloudflare's Worker AI and Agents SDK, so software development kit, I guess, allow developers to create agents that can remember context, interact with tools, and run autonomously. All right. Okay. So Fastly CEO Kip Compton said during his company's most recent earnings report that the management of agents across the platform was driving up usage. Akamai CEO and co-founder F. Layton indicated the same through its cloud infrastructure services business segment. In each of these areas, we're starting to see the benefits from AI-related tailwinds as customers make greater use of AI applications and agents across their businesses, Layton said. Last quarter, Akamai took a major step towards the future with the launch of Akamai Inference Cloud, our platform to support the growing demand to scale AI inference on the internet. Anthropic's Managed Agents is a hosted service in the Claude platform that runs long-horizon agents on a user's behalf through a small set of interfaces meant to outlast any particular implementation. We virtualize the components of an agent, a session, the append-only log of everything that happened, a harness, the loop that calls Claude and routes Claude's tool calls to the relevant infrastructure, and a sandbox, an execution environment where Claude can run code and edit files, said Anthropic's Lance Martin in a blog post. This allows the implementation of each to be swapped without disturbing the others. Well, see, so unless you're like a software guy, hell do I know? What the heck, man? What am I supposed to do? Oh, fuck that shit. Okay, so what's the most important thing on Friday that everyone ignored? Everyone ignored this. Consumer sentiment based on the University of Michigan survey. So this is what they do. University of Michigan, what they do is they call a bunch of random boomers and they ask them questions about the economy. And so if their sentiment is low, the Federal Reserve takes that into account. The Federal Reserve actually listens to this survey. I don't know how good this survey is. They just ask a few boomers, like maybe a handful, like 100 boomers over the phone, and ask them like, well, how do you feel about the economy? And we hit 47.6. So that's the latest. Lower than in 2022. If you remember the last stream I did, I went to this old article. Sector rotation model signals economy moving towards early recession. So let me get the original. Okay. And this was written in 2022. You have to remember, everybody in 2022, over the summer, from spring to the summer, they thought we were going into a recession. They thought we were about to go to a recession. And one of the signals was the University of Michigan consumer sentiment. It was going down. When it's going down, that's one indication that a recession is coming. The problem is that we're at a new low. Usually when you get to a nice low like this, that's a bottom. So ever gone below this before this survey was ever created. The 1950s was when we started doing surveys. I have no clue what happened before World War II or anything, or during World War II, anything like that. We have no data before that. So we can't really judge if this was actually lower in those times. Okay. I'm sure the Great Depression, it was definitely lower, right? But apart from that, I don't know. So conventional wisdom is that you buy it. So if you get really low numbers, this is what happens. Every time you get to a bottom on this survey number, a really low low, a local low, usually the stock market goes up 24.1% after that. So technically this could be bullish if this was actually a bottom. If this thing is gonna keep going down lower and lower, and we're breaking new records of it going lower, then ooh, yeah, that's bad. Then that means it could be that we'll have to say that recession is coming earlier than I expect. I was expecting more like maybe early 2028, late 2027. Yeah, of course, every bubble is gonna pop, but when? That's the question. You can make a lot of money in a bubble, right? Like as you've seen so far. You bought semiconductors on last April, what happened? You buy SOX L, it goes up like what, 600%? If you bought SanDisk in September, August, it went up what, 300%? Like, it can go up higher and higher from here, like another 200, 300%. It's like bubbles are a great time to make money. The problem is that you don't want to be the guy holding the bag. You don't want to be the guy at the top, right? Buying it. Where is the top? Okay, that's the question. I think June we will have a certain inflection where we'll know that we'll sink down again. When we sink down into October, we'll have to see if October holds. If October holds, then we'll get a bigger push up into 2027. I think sometime in 2027, you'll get a big pump up. Okay? The AI bubble will be crazy screaming. You got all these IPOs from Anthropic, OpenAI, SpaceX, which is now trying to merge with Twitter, which is XAI. So you got 3 AI companies going to have IPOs. You have all this stuff. You know what? That's a great time to make money. There's hype. People are going to run into it. The other problem, though, is that oil, right, is going to stay high. That's really what's going to happen right now. And what are we going to do about that? Yeah, that will affect the timeline. This is why everything's fucked up, because the whole timeline is getting screwed with all this noise. It's not clear anymore. I was just planning 2027 top and we're done. So you see this? IMF, International Monetary Fund, warns Strait of Hormuz might never be back to normal, which is probably true. It's not going to go back to what it was, right? People are just going to change everything again. It's the same thing with the Somali pirates. People were rerouting ships away from going through there. They're going to reroute their ships from staying away from the Strait of Hormuz. They're going to use the pipelines that can take all that oil and natural gas and pump them in other ports. And they're going to avoid it. So things are not going to go back to normal probably anymore. It's done. Done deal. The International Monetary Fund warned that the closure and reduced traffic in the Strait of Hormuz might become the new reality for the waterway, similar to what happened with the Strait of Bab el-Mandeb. And Bab el-Mandeb, so between, Djibouti and Yemen, that strait is already being threatened too, because the Iranians were threatening to use the Houthi rebels to shut down that one. And now that we're trying to shut down the Strait of Hormuz again, they might just go and tell them to shut that down too. Like, shut everything down. Oh man, this is going to be like COVID shipping crisis all over again. Might become the new reality for the waterway, similar to what happened with the Strait of Bab el-Mandeb in the Red Sea. IMF Managing Director Kristalina Georgieva gave a speech on Thursday at the fund's 2026 spring meetings in Washington, where she warned about the effects of the war in the world, calling it a supply shock that is large, global, and asymmetric, alongside the already known effects on the oil price, which jumped from $72 a barrel to over $100 a barrel, reaching $120 at the peak of the crisis. This disruption of key supply chains that especially affected Asian markets. We got to get that helium for the semiconductors. Actually, You know, right now they are changing where they're getting helium to the United States. So if they start shifting more and more stuff towards us, we better drill, baby, drill, drill, baby, drill. Open up more ports. Hurry the hell up. You know, Biden really stopped us from building extra ports on Corpus Christi and Louisiana to ship out more natural gas. So natural gas, helium, we could do it. We could actually just replace Qatar and all these other Gulf states and be the world's leading supplier of stuff that chips need. So yeah, so hurry up, drill it, drill into the earth. Come on, man, you gotta take opportunity. There's gonna be a lot of opportunities if the oil stays up at around $100. Okay, that's it. This is perfect time to expand our infrastructure because there's a lot of profit in it. All right. Okay. Yes. Georgieva warned that the crisis could push to a new reality where the Strait of Hormuz loses most of its traffic and ceases to be a key waterway. The main example given by the IMF director was Bab el-Mandeb, which since October 7th, 2023, has seen its traffic almost halved after the Houthis, which operate as one of Iran's proxy groups in the region, attacked the shipping lane where vessels were sailing. According to the fund, ship passages through Bab el-Mandeb on the Red Sea have never quite recovered from the devastating disruptions there and remain stuck at about half their 2023 level. The IMF also said that the fact that many oil and gas fields in the Gulf region were struck during the war and will need several years to resume normal operations. Yeah, up to 5 years in some cases, will be another key factor in this new reality. The main example cited is Qatar's Ras Laffan, which accounts for 93% of Qatar's LNG production and has essentially been shut down since March 2nd, with an estimated 3 to 5 years needed to restore its full capacity. With these factors in mind, the IMF says that due in part to the unpredictability of the security situation, the only estimate that it can give is that growth will be slower in the near future, calling on countries to reject go-it-alone actions, export controls, price controls, and so on, that can further upset global conditions. Trump's hint at possible blockade of Hormuz raises alarms. In addition to the IMF report, a social media post from U.S. President Donald Trump raised the alerts about the possibility of a total shutdown of Strait Hormuz. The U.S. president shared an article on Truth Social, the main social media platform used by Trump, which said that an option to solve the crisis in the region would be a total blockade of the strait, stopping ships even from entering Iran. All right, so yeah, we're just gonna block everything. Netanyahu's plan of rerouting Gulf's pipeline. Yeah, we're going to work on the pipeline. I think the Saudis fixed one of the pipelines going from east to west, so we might, they might just be trying to get around it by going to the Red Sea. But if the Red Sea gets blocked off, oh yeah, great, perfect. A couple of weeks before the IMF's warning, Prime Minister Benjamin Netanyahu suggested that the main solution to the crisis in the Strait might be to reroute the Gulf states pipeline towards the Mediterranean. Oh, yes, Israel, of course they'll benefit. Oh, you want it to go directly to the Mediterranean. Yeah, you just avoid everything, right? Perfect. Hinting at Israel as a possible secure location for this project. Long-term solutions include rerouting energy pipelines westward across Saudi Arabia to the Red Sea and Mediterranean. Well, Red Sea, forget the Red Sea. Let's just focus on the Mediterranean, right? Bypassing Iran's geographic choke point. All right. The project would most likely involve a network of pipelines and roads that would allow other products, such as fertilizers, to be exported through this new road. A report by the Financial Times revealed that the Gulf states are considering this possibility, with one of the main options reportedly being made a trade route connecting the Arabian Peninsula to the Mediterranean via the port of Haifa. Haifa is also very important because that's the home of Israel's Silicon Valley. Okay, Intel's over there along with many other semiconductor companies. All right, perfect, guys. What's up, roller skate? Yeah, drill, baby, drill. What's up, Cinerange? Writing in the raw, straight. Yeah, the writing is on the wall. Straight is a no-go zone. It's over. They're gonna control everything. I mean, that's why they went after Hamas, man. You know, Hamas is sitting on offshore natural gas fields. They got tons of natural gas off the Gaza Strip, dude. They're gonna try to take over from Qatar, man, as the new natural gas hub. So perfect for them. Anyhow, back to this. So we're gonna have to look through more of these things as we go along, as I said. But the key thing is, what the hell's up with consumer sentiment? This is what I'm worried about. So yeah, where are we gonna be? Okay, so you can take a screenshot of this. Okay, and then screenshot this for yourself. Okay, good. All right. So okay, complete. Okay, done. I'm going to talk about the milkshake theory, but before I do, let's learn some math. I know you guys love math, don't you guys? I think you guys need to learn some math.
Radius R centered at AB to re-enable Agartha's force field.
Bro, where do I even start with this bullshit?
My son, let's start off with an easier problem first. How would you describe a circle?
I don't fucking know. A round thing?
What do all points on a circle have in common?
Oh, they're all the same distance from the center of the circle?
Exactly, my son. A circle is a collection of points at a certain distance, aka the radius, from the center.
How does this help me get an equation for a circle?
How do you calculate distance when you know the horizontal and vertical offset?
You make a right-angled triangle and use Pythagoras.
Precisely, my son. What relation between x and y would give a circle centered at the origin?
We use Pythag on the distance from the origin to xy to get x squared plus y squared equals the radius squared.
Correct.
You know, this might be a joke, okay, to some people. But bro, this short, well, this is not actually a short. How long is this damn thing? Well, I guess it's technically a short, but this thing covers a lot of major math topics in such a short video in such a nice way. You know, you're basically covering everything I learned from middle school. Well, yeah, middle school, I guess. Yeah, middle school, because I did do algebra in middle school. Okay, middle school all the way up to probably calculus, right? They'll go up to there, and they go even farther beyond basic calculus. So this is pretty cool.
You make a right-angled triangle and use Pythagoras.
Precisely, my son. What relation between x and y would give a circle centered at the origin?
We use Pythag on the distance from the origin to xy to get x squared plus y squared equals the radius squared.
Correct, my son. Now, how would you change the center of the circle?
Would you add the coordinates of the center to x and y?
No, my son. You need to subtract them. Think of it like this. The value for x and y have to be higher to reach the same value as without subtracting.
Oh, and adding will move it left or down. Weird, but it makes sense, I guess.
Well done, my son. Those 600 years of selective breeding were worth it just for you. Agartha needs you to derive the quadratic formula to educate the Goylings.
Bro, how am I even supposed to start this bullshit?
Well, you can start off by dividing everything by a.
What if I visualize this in terms of shapes? A square with area x squared plus a b over a by x rectangle plus a shape with area c over a.
My son, it doesn't make much sense for the areas to add to 0.
Good point, bruh. I'll have to move this one to the other side of the equation.
Now, my son, if you split the b over ax in half, you have a square with the corner missing.
Oh, so we can complete the square here.
That's right, my son. You can do this by adding a square with side length b over 2a.
So now we have this equation. Let's add these fractions together.
Now to undo the squared.
That's a beautiful way to explain it with the shapes, you know? So I found this other channel just because I clicked on that one. The algorithm gave me this. This guy here really explains things.
Phenomena that propagate in the form of waves, or can be described by the concept of a wave. To understand these phenomena, we model them mathematically. It is remarkable that the mathematical description of a wave even when solving complicated differential equations, can be traced back to a simple geometric shape, the triangle. So how can a wave arise from a triangle? Let's find out. First of all, there are an infinite number of triangles with different sizes, orientations, and angles. But which one is the coolest? Well, for the Babylonians, it was the equilateral triangle. They were so impressed by it that they even formulated the concept of an angle based on it. In a sense, what they observed between two sides was one angle. And because all sides of this triangle are equal in length, it had 3 of them. And because these people used the sexagesimal system for the concept of numbers, which is a number system based on the number 60, they loved to divide different things into 60 parts. Not only were units of time divided into 60 parts, but also units of space. So they imagined that this angle also consisted of 60 equal parts. One angle therefore corresponds to 60 angle parts, which we now call degrees and symbolize with a circle. Since exactly 6 of these form a complete circle, we measure 6 times 60 or 360 degrees in a circle. When humans later discovered that they had 10 fingers and began using the decimal number system, they were not very amused by the fact that the Babylonians divided spacetime by 60. So they divided the units of time further into powers of 10. And the angle measurement also had to be changed. For this purpose, a fascinating property of a circle was used. If we divide the length of the circumference c by the length of the diameter d, that is, if we calculate the ratio of circumference to diameter, we get a number that always remains the same, no matter how large or small we make the circle. Today we know this number as pi. If we rearrange the equation and set the diameter equal to 2 times the radius, the circumference corresponds to 2 pi times the radius. With a radius of 1, the circumference is simply 2 times pi. And it was precisely this circle that was used as a template for a new measurement of angular units, which is why it became known as the unit circle. Instead of imagining that, for example, a 60-degree angle consists of 60 parts, we place our circle template with its center at the tip of the angle and measure the length of the arc that this angle encloses. In the case of this angle, the arc length corresponds to 1/6 of the entire circumference, that is 2 pi divided by 6, or pi thirds in reduced form. At a 90-degree angle, the arc occupies a quarter of the circle, so this angle corresponds to a quarter of 2 pi, or half of pi for short. Because we use this angle so often and want to recognize it quickly, we mark it with an additional dot. And for a full circle, we eventually measure the complete circumference of 2 pi. Oh, and the coolest triangle was no longer the equilateral triangle, but the right-angled triangle, because it can do everything that other triangles can do, and in addition, the Pythagorean theorem applies to it. Furthermore, we can construct any other triangle from 2 right-angled ones. So if we understand the right-angled triangle, we understand all the others. For the study of triangles, known as trigonometry, it is therefore sufficient to examine the right-angled triangle. Alright, let's first name the individual sides. The side opposite the right angle is called the hypotenuse, the other ones are called legs. From the perspective of an angle, which I will simply call alpha, we can also name the legs more precisely. The side opposite to alpha is then called the opposite leg, and the one adjacent to the angle is called the adjacent leg. From the perspective of the other angle, we would swap these accordingly. With these 3 sides, we can create a total of 6 ratios, whereby in the last 3 ratios only the numerator and the denominator of the first 3 are swapped. And now comes the remarkable part. As with the circle, these ratios also correspond to a number that does not change no matter how large or small we make the triangle. For the number to change, for example in the first ratio, we would have to change only the numerator or only the denominator. But how can we change the numerator, which is the length of the opposite side, without changing the denominator, which is the length of the hypotenuse? Well, we would have to change the angle alpha. Meaning, if we set the hypotenuse to a fixed length and increase or decrease the angle alpha, then the ratios change. So if these ratios only change when alpha changes, then we can also understand them as functions that depend on alpha. Each of these functions has been given its own name. The first one is called sine, the next one cosine, then there's tangent, cotangent, secant, and cosecant. If we choose a fixed length for the hypotenuse, then we might as well choose a length that simplifies everything a little bit. For instance, with a length of 1, the sine of alpha simply corresponds to the length of the opposite side, and the cosine to the length of the adjacent side. And even better, we see that we can calculate the other ratios using just the sine and cosine. In other words, if we understand these two, we also understand the others. And we can now also use our unit circle template to measure the angle alpha.
Yo, what's up?
Alright, now we need to visualize these functions. Let's start with the sine. To do this, let's draw a coordinate system and plot the angle on the x-axis and the length of the opposite side on the y-axis. If we increase the angle slightly, the opposite side becomes longer. As we approach an angle of 0, the length becomes smaller and smaller. At an angle of exactly 0, the opposite side disappears. But we can imagine that it's still there, just with a length of 0. If we now rotate around the entire circle and trace the path, we obtain this curve for the sine. Here, negative lengths mean that the opposite side is in the lower semicircle. And that looks like a wave, doesn't it? For the cosine, we can simply copy the coordinate system and offset it by 90 degrees, because the adjacent side is offset by 90 degrees to the opposite side. However, we can also draw the cosine function in the same coordinate system. Here we can also see that the cosine looks exactly like the sine. It's just shifted by 90 degrees, or half of pi. So if we understand the sine, we also understand the cosine. And finally, we can extend the sine function to a larger angle range. We can just agree that we can keep rotating around the circle beyond 2 pi. And a negative angle just means we rotate clockwise.
And there you go. That's how you can describe cycles with a triangle. And you know what? The Egyptians already knew that shit. Why do you think the Pyramid of Giza has pi, phi, golden ratio, all that shit built into the system? The Egyptians already knew that. So if you don't know as much as the Egyptians, you ain't going anywhere, man. Come on. Fucking shit. You're morons. So the Babylonians already knew. The Egyptians already knew. They built up all those pyramids. Why? Because they were telling you that these numbers were significant. They had actual power and meaning, you know? And everything we do in this show, we talk about cycles, this, that, and I show you the sine waves and whatever. If you know that stuff, you can predict the stock market and economics and things like that. That's what we're trying to do. All right. Anyhow, everything's in the description, so you can go in the description. If you're in Kick, you got to go to the YouTube channel, give crack to me, and get it from the description. Here, let me get it for you right here. So yeah, I just found it. I think he's starting to translate his videos from German. So he was actually a German channel, and now he's just starting to make English versions of his little things there. So you can go the link. I put the link there. It's SNSUS-English. That is the channel. Okay, right there. So that's the link, and this is the channel name, SNSUS. Here's the link. Okay, there you go. And that's the thing, you know, people that are very good at math, they don't look at math with just like, they don't read it like equations. when they write it down for people to understand what they're thinking about, they write it in equations. So most people, when they look at these equations, they're like, what the fuck? What the hell? But for them, they visualize it, right? I mean, Einstein visualized everything when he discovered special relativity and general relativity and all this. Everything was a picture for him, right? He just absorbed these things and conceptualized these things as pictures. Now that we have all these cool animations, like we can do everything with animations, we can teach math in a way that actually represents how people who are smart think about math. And it's a lot easier for you to understand math concepts when they teach it to you like that, right? Because otherwise everybody just goes like, oh, the cosine, sine, tangent, secant, but they don't really understand why that's important. Why do I'm learning that stuff? Well, it's actually building on stuff that you'll use later. Just like that Agartha short, everything in that Agartha short, like you do the quadratic formula, this and that, everything builds up to something else. Everything's a stepping stone for newer concepts, greater concepts. And that's how we get to where we are today, by, using those things. Because, for people who just think in math, this stuff is abstract. It doesn't necessarily have anything to do with reality, but somehow we can find usefulness in them later on in life. Things like imaginary numbers, complex numbers, then you get Fourier transforms, and then all of a sudden now you can analyze the stock market and know what the future is. See? But if you didn't have all those steps ahead of time, you don't know jack shit. You can't predict the future. So that's the goal. That's the goal. Anyhow, let's go. Let's get back into it here. Let's go. Let me get my let me remind you about the dollar milkshake theory, and then we continue on, and we'll look at what stocks we'll have to look at for this week, and then yeah, we'll go there. All right. Okay, let me remind you again. This was in 2020. Brent Johnson has been talking about the dollar milkshake theory for a while, though. And 2020, he said $5,000 gold, dollar milkshake theory. Okay. From the movie There Will Be Blood, quote, in quote, you know what? It doesn't matter if I own your land or not. Even if you have a milkshake, I have a long straw. I put my straw in your milkshake and I will drink it. So when I saw that scene, I thought it was a very good analogy for what was going on over the last couple years, which I think will pick up speed in the next couple years. Post GFC, Great Financial Crisis, 2008, 2009, the world's central banks and monetary authorities got together and they printed all these different currencies. They created a currency milkshake of pounds, yen, euros, reals, etc. For a number of reasons, I feel that the US has the straw. For a few years, we were raising interest rates, and that acted as a straw, sucking up the liquidity that the rest of the world was providing. And that's largely why you saw the US markets do what it did. But it wasn't just based on interest rates. The interest rates is the primary, but not the only driver. There's a number of other factors. We have the deepest financial markets in the world. There's a large amount of US dollar denominated debt outside the US that acts as demand for the dollar. That's why the dollar is important. So everything we see now, the conflicts around the world, in the end, it's about the domination of the dollar. Okay? So he continues, the U.S. Navy enforces the dollar as the global reserve currency. The rule of law, the tax policy, the trade policy. There's a number of factors that lead the U.S. to being one of, if not the most hospitable place for foreign capital. I think that acts as a straw that sucks up the global capital, and I expect that will accelerate in a couple years rather than decrease. My point is not that you shouldn't own gold. My point is that when it comes down to it, people need to have dollars. They don't need to have gold. They may want to have gold, and I may want to have gold, But to operate on the world stage, you need dollars. And when they had to choose between dollars and gold in March, so remember, 2020, the crash from the COVID lockdowns, what happened? Everything crashed. Everything crashed except for dollars and bonds, U.S. bonds. Now, I'm not talking about world bonds. I'm talking about the U.S. Treasury bonds. Okay? That's what you saw. Now, after we got through that liquidity squeeze, gold and miners went up faster than anything else. But when liquidity needs come, dollars are favored. So I don't know what's going to happen with all this private credit. People are screaming and yelling that something's going to happen. I don't know. The Federal Reserve's talking to the Treasury. So Jerome Powell's talking with Bessent. They're worried about something with AI and all this software companies getting crushed. I don't know. All right. I think we still have a short-term pullback before we get to the heart of the chaos, where the other economies will break down, and as a result, the U.S. will get some flows from abroad. The point I like to make with regard to what the central banks and the Fed in particular has done, whether in the last 3 months or the last 10 years, is that nothing has been fundamentally solved. There has been no new programs or new structure to the monetary system, which will keep the problems from the last 10 years from happening again. Everything that has been done builds upon what has already been done. In other words, it ultimately makes the problem bigger. It does not solve it. They paper over it. They extend loans. They provide new loans. They print more money, but it doesn't fix anything. All right, now, let me see. Should I skip this? Blah, blah, blah. Let me see. Blah, blah, blah. Okay. When money gets loaned into existence, it is created out of thin air. When loans start to default and they default at a high enough rate that the whole system becomes impaired, money disappears. The money supply crashes. That's a definition of a credit crunch. When loans are no longer extended, you can't get access to new financing, and then you default. And then whoever you defaulted on, they don't receive their money and they can't pay whoever they borrow from. You get into this reverse spiral. Okay, so that's what you're going to have to worry about if all these software companies crash and burn, and Oracle crashes and burn, and who knows, Google, Microsoft, they've been burning through a lot of money, getting a lot of loans to build more data centers. So if you believe in the AI bubble, this is what's going to happen. So my point of the Fed, who is creating new dollars, but not more dollars, is that they're trying to fill a bucket that has a hole in it. If that bucket is leaking 1 gallon per minute and you're adding at 1 gallon per minute, you're not putting more water in the bucket. You're just keeping the bucket full. And it's kind of the same thing with the monetary system. With the COVID crisis and the slowdown with the global economy, and with dollar loans not getting paid, and with a credit crunch, defaults are happening. Money is not being created. The Fed is trying to plug that hole, trying to recollateralize the system. Right now, they're just trying to replace the money that's being destroyed. So that's what he means by not creating new money. Okay, he's not creating new dollars. Okay, that's the problem here. They're not really doing that. So what you're having is you're just kind of like treading water here. You're making the new dollars to replace the old ones that are being destroyed. So once we get into this credit spiral, watch out. That means that leak is not going to be 1 gallon per minute. It's going to be 2 gallons, 3 gallons, 4 gallons, and all the Fed is doing is trying to pour in 1 gallon. We're screwed. Okay, well, let me go down here. So swap lines. The huge problem now is that the global dollar debt at a minimum is $13 trillion. That's a huge amount of capital and demand for dollars outside the United States. When the economy slows down, not only is it tough for those economies to service those debts, it makes it impossible to pay off those loans when they come due. So the argument has been made that the Fed will just bail out the rest of the world. They will print however many dollars are needed to give to the rest of the world via swap lines. The Fed is not a proactive agency, and that goes for all central banks. The Fed is a reactive agency. The reason the Fed is printing dollars is because there's a huge demand for it. What happened in March was a huge spike in the demand for dollars, so much so that everything that was priced in dollars got sold in order to get the dollar. So even gold and silver. Okay? The Fed was responding to huge demand for dollars, both from the United States and the external community. That is why when the Fed extended swap lines to these other countries, it was to get these countries access to dollars they couldn't print themselves. Okay, so what is China going to do? Okay, dollars is one thing, but I can't use dollars outside of buying certain products, right? Oil, I'm forced to using dollars to buy oil. That's one thing, right? That's one major reason they did that, so that it keeps demand for dollars strong. Because I need oil more than I need dollars. I need oil more than I need gold and silver. Oil is the primary commodity, okay? It is the best commodity because it's the only commodity that really matters. A lot of our modern world, it runs on petrochemicals. Petrochemicals. That means not only oil, but things that are made from petroleum. Okay, a lot of your KY jelly, Vaseline, plastics. Okay, all that stuff comes from petroleum. Hell, even food coloring probably comes from petroleum. There's tons of things that are made from petroleum that you couldn't even think about. Monty is working on them right now, probably. Right? Chemistry, material science. So oil is more important than many, many other commodities, many others outside of food. So if the petrodollar system is about to be broken right now, and this is why China has been buying up a lot of lithium, they've been buying up a lot of copper, they've been hoarding silver and gold, it's because they're getting ready to make a move. They're getting ready to break the dollar. They're basically going to say, yo, you want lithium? You want nickel? You want copper? You want oil? Pay us in yuan because we hoarded all of it and we have spares to give you. That's it. It's all about commodities now because the only way you break the dollar is to have more commodities than the U.S. has control of. If you break the Hormuz Strait, if you break Mar al-Mandeb, whatever, Bab al-Mandeb, whatever it was, whatever other strait it was, that's it. That's the end of it because the U.S. Navy is the one that enforces these rules. Okay? All right. So let's go to the swap line. So Russia got kind of like a taste of this, right? First of all, I need to explain how a swap line works. When we extend swap lines to other countries, we are not just giving them dollars. These are not gifts. These are loans. As an example, we will give the ECB, the European Central Bank, $1 billion, and they will give us $1 billion worth of euros, a swap. And at some point down the road, those need to be swapped back. The reason we give them dollars is because corporations, banks, and individuals in those other countries have dollar financing needs for dollar loans. To conduct trade in dollars or for whatever reason, it's part of this dollar-denominated debt, dollar needs, or euro-dollar market outside the United States. So where is the ECB getting their currency to swap for ours? They have to print it too. So it's not like we are printing and they are not. They have to print at the same rate as we do to get the swaps. So when we swap with the ECB hands out those dollars to the banks, and those banks extend new loans to corporations. It's not paying off old loans, and it's not increasing the problem of dollar debt. It's reinforcing, not negating, the demand for dollars. Until they actually deal with paying off all this dollar debt in the world, the problem still exists. If you're paying off an old loan with a new loan, you're extending the problem. So to your point, if this can be used as a weapon, they can absolutely be used as a weapon in the same way the U.S. cuts off the SWIFT system from Iran, Russia, and other countries in times of discord or geopolitical turmoil. This was written, remember, 2020. This was before Ukraine, all right? So people already knew this. If Russia did something naughty, if Iran did something naughty, if Gaddafi did something naughty, you got cut off. You got cut off from the dollar system. You got cut off from the SWIFT system. They can do the same thing with the swap lines. They're not going to give a swap line to somebody to bail out their economy if we have sanctions on them. I think we're going into this G2 world with China minions and the United States and their minions. If you want dollar financing, which everyone needs to operate on the global stage, then you have to play ball. Well, there you go. We are now in this world, the G2 system. United States and its minions. China and its minions. This is it. We are finally here. 6 years after 2020, when all this prognostication was given. So we are at the peak of it. I've heard short-term treasury yields are too low for inflation now, factoring in long-term energy prices. Correct. That's correct. The problem, though, is that gold has to be sold for oil. Turkey has been selling a lot of gold for oil. A lot of these countries that have been hoarding gold are now dumping gold, except for probably China. Poland has a lot of gold, too, for some reason. It's one of the strongest GDPs in the EU. Does Poland even trust the Euro system? Maybe Poland is thinking, we got to hedge our bets and have gold too, just in case we want to leave the Euro and go join China's minions. The world has two choices. Do you bet on China and the yuan-dominated world, or do you bet on the continuance of the US dollar system? That's your bet. Okay? But yeah, I would say like the future yields, it's gonna have to go higher to meet the future inflation. Obviously, inflation numbers are already like BS anyway. I mean, most people don't believe it's 2 to 3% PCE, blah blah blah. Yeah, right. Most people believe it's 4 or 5, even more. You know, there's websites out there you can go, like kind of borderline conspiracy, that think it's like 15% real inflation. In any case, it doesn't matter to me. You can see it in your wallet. You can see it in your paychecks, your bills. How much of your dollar actually does anything anymore? All right. Now, considering that, we have to look at international stocks. I'm a big believer in international stocks. Okay? And right now, let's look at the global equity forward PE. So last stream, I talked about US S&P 500 PE, right? It's around like 20, 21, 22 forward price to earnings ratio. And Warren Buffett, if you follow his very strict, disciplined way of investing, he would not buy the S&P 500 at 20 to 22 forward PE. He rather would buy it at 10 to 15. Okay? He wants a crash. That's why he's getting all those dollars, right? He just goes like, I'd rather just hold on to these treasury bills and treasury bonds and treasury notes because you're not offering me a good deal on the S&P 500. I'd rather wait for a crash. So that's what he's doing. Okay. Now, you have another choice, though. You can buy international stocks, right? This is one of the reasons Warren Buffett bought a lot of Japanese stocks last year and the year before that. I think he was buying a lot of Japanese stocks. Let's see where Japan is. Is it on this list? Japan right here, 15-ish. So not very cheap right now. So 15, 16, 17, it's probably around here. Okay, so what else? What other places we got that we can look at? Turkey is below 10, but inflation is very high. So 32, 33, 31%, somewhere there. South Korea, pretty cheap, huh? I'm not sure if this is up to date with the recent run-up in South Korean stocks, so not sure if it's still that cheap, but I would guess that it probably is still at least like below 15 price to earnings ratio, so still pretty cheap. US is up here, you see. I think if it was more up to date, it'll be higher, right up there. It's definitely not 18 or 19. It's probably 20, 21. Okay, what else? I think Brazil looks pretty good, right? Do they have Brazil on here? Brazil, yeah, 10. Brazil, I like that. I like looking at Brazil. I also like Mexico. Mexico here, maybe 12, 13x. So, yeah, there are a lot of international stocks that look more attractive. Okay. So, the other requirement for international stocks to be good is that the dollar needs to be weak. So we're kind of dancing at the point where the dollar is going to be stronger a little bit here because people are trying to run around figuring out what to do. So the dollar demand is higher. But eventually, I think going into next year, the dollar demand will start going back down and these stocks will rise up again. Mexican stocks have recovered. very well. Brazilian stocks have a new high right now. So I think those two areas are going to be my first targets. So those countries, those Latin American countries. I've also looked at stocks for banks in South America. So there's Colombian stocks, Chilean stocks. I'm looking at, so their bank stocks are looking pretty good actually. So yeah, bearish on you. Yes, bearish on Europe. Europe is trash. Definitely trash. Europe is too dependent on energy shocks, just like South Korea is. So South Korea and Europe are kind of in a trouble. Taiwan as well. Japan also in trouble because of that. So those are not that attractive for sure. I think Europe also has issues with high tech. They are way too socialist. They don't allow their tech companies to grow like Facebook and Microsoft or whatever. They hate rich people there. So if you want to suckle the teat of big corporations, you do it in the United States. The only like major companies, right, in Europe are chemical companies in Germany, drug companies in Denmark. Very few select companies, I guess. Some maybe defense companies too. I talked about one, like the Italian defense company, which looks very good. I like that one. But outside of a few select stocks, overall, like an ETF, like you buy a whole basket of those type of stocks, no. If you just want to buy a whole basket of stocks, it's better you're in Brazil and Mexico, man. So Mexico and Brazil, all right? Those are your fucking stocks. That's where you want to be. Okay. So that's it for those articles. All right, we're done. We're done. Good, good, good. Taco, 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 taco. Jennifer Lopez, taco. No taco. We don't know what the taco is. So let's get this show on the road. Let's look at the stocks. Let's see. Okay. I think the market's gonna recover pretty soon anyway. I don't think this dip is gonna be as severe as, so this ain't gonna be the one that we're gonna really care about. That sucks. That kind of sucks, you know. I need a bigger dip. Otherwise, I gotta buy Palantir. Shoot, I did buy a little Palantir on Friday, but otherwise, I didn't really like any price anywhere else. Okay, let's put up the banner. Okay, the banner. Let's look at this. Okay, so this is the futures market here. So this is what we did. We just dropped a little bit. A little tiny, winky drop. No problem. But let's look at the stocks. Let's look at the stocks, how they were on Friday. You see this? You see this? Palantir. So after the taco, it fell. Anthropic. It went below to 125, and I just said, time to buy. Let's buy this Palantir again. So there we are. That's a good hit, right? Good target. Right there. It just went like first hour, it went below it, and then it rallied right back up. I think it was some guy on CNBC that talked about it. It was like, oh, Michael Burry doesn't know anything. That guy doesn't know shit, blah, blah, blah. And he pumped it right back up. So Anthropic, Michael Burry, who cares? It stayed at that red line. Look at that red line. Very important red line at $125.68. So, yeah, that's a place to buy it. So I'm using leverage ETF. I use PLTU. There's another one, PLTG. Yeah, that's another one you can use. Oh yeah, I bought this one. Whatever. Let's just start it off. Let's just buy this. Okay. If you're on WebL, you don't need to worry too much. See, WebL doesn't matter. If you bought it on that Monday I told you to buy it, and you sold it at Taco Day, that was like 30%, right? If you held it, no problem. You're still up 20%, no big deal. AIBU pretty much ignored it altogether. It was up 0.95%. AIBU 2x leverage. So AIBU and WebL, I recommend it for a reason, because you can hold it and you don't need to really pay attention too much. Because if you bought like SOXL or GDXU, you're gonna have to pay attention now, really carefully, because right now they're down like 5 to 7% overnight on Robinhood right now. So GDXU, SOXL, yeah, you don't know what's gonna happen tomorrow morning. This is barely moving. It doesn't care. It doesn't care about COVID. I mean, not COVID. I mean, okay, Strait of Hormuz. The reason, because it's already gotten beaten up. It's been beaten up. It's been beaten up. So, like, everybody runs back to silver, runs back to semiconductors, but they're not going to touch software too much. So it doesn't go up as much, but it's not going to go down as much when you have a threat like this. My thinking is that, okay, this will hold together pretty nicely. Now, this is when you start adding Palantir, right? And all the other stuff. So I started talking about like, well, let's do CrowdStrike. So there's a 2x leverage ETF for CrowdStrike, CRWL. Okay, I didn't buy this one yet, but you can see like, if it goes to 16 and it keeps bouncing around there, maybe I'll buy it. Maybe it goes down to 14, I'll buy it for sure, right? PANG 2x Palo Alto Networks. Okay, let's see if it goes down to 6 or whatever on this one. So yeah, Palantir, same thing. Like, what is it? It's 11 or PALU 2x leverage. Maybe it'll go down to 10 or below that. So yeah, these are the areas you want to look at. This is it. These are the ones to add more exposure. And then now I'm going to add you another one, because I saw Cloudflare getting whooped. Look at this one, NetG. This is a brand new one too. It was introduced in December. So this is 2x leverage. NET. So that is Cloudflare, NET, the ticker symbol. So you can leverage that with NETG. Maybe it goes to $7 or $6 a share, and I'll buy this. Why not? And then you can get out in June, May, late May, early June. Maybe we can hold on until like mid-June and even early July. I don't know how high it will go, but I'm definitely gonna be looking at this. That's a quick trade, you know. It could go pretty high, because it goes down pretty fast. It's gonna go up pretty fast too once all these shorts get blown up. So let's say it goes down to 145 on net. Okay, let's see if it undercuts it. Let's see if it goes down here. Okay, let's go 140. So this thing can go down to 140 sometime soon. So down 15. So 15 to 16. So down another 30%. So NetG, maybe it can go down. Let's be conservative. Let's be conservative. So NetG can go down maybe 20. Okay, let's do 20%. Let's be somewhere around there. So around $6. Okay. So let's say it gets down there. All right. Now let's say it goes back up to 230. Okay, 230. So, and we said like what? It was down at, let's say here, 143, whatever. 61%. Okay, 61%. I can get 61%, right? So that means I can go up 120 on this sucker. All right, let's see, 120. How high can we go? If it goes up in a straight line, let's see. I can go up to 17. Okay, wait. I gotta go from 6. All right, so 6 was where I was. All right, 6. Down here. Okay. So maybe $13.50 from 6. How about that? So that's what I'm hoping for. I'm hoping for a lot of these software companies to do that. Like, they just go down and then snap right back up on a relief rally for some reason. Earnings or whatever, who knows? Earnings is coming around the corner. So if these things get beaten up before earnings, I'm willing to play it. I'm willing to play them. Okay, so if you want to add more risk, WebL, not enough for you, not enough juice for you. You want more risk, start putting on these guys, right? So AIBU, not enough, put on these guys. Start adding CRWL, PANG, ALU, NetG, all that stuff on the banner. There you go. That's what we're gonna do. So in the Substack, I'm gonna try to figure out all these targets, and then we're gonna go from there. So first off, though, we gotta see the market crash. I don't think it's happening tomorrow based on this. I don't know. Looks like it's already trying to recover. Oh, come on, this ain't enough. This thing's got to crash a little bit more than that. This is boring. So yeah, we're gonna need more than this. This ain't gonna be enough for us. Okay, guys, that's it. Ride the earnings wave. Earnings for software isn't going to come for another month, man. So we got time. What's coming up is semiconductors first. We got banks and semiconductors. Okay. That's what's happening next week. Is that going to be important compared to the noise from the Strait of Hormuz? I don't know. I don't know if it will be. That's the question. I don't think it matters. Only thing that matters is, like, is there going to be escalation, real escalation or not? Are a lot of the straits going to be blocked off now? Not only the Strait of Hormuz. We need more than that. Everybody just wants to hear what earnings are, and the first one will be J.P. Morgan Tuesday. I mean, there'll be like Goldman Sachs tomorrow morning, but nobody really cares that much about what Goldman has to say. What Jamie Dimon, J.P. Morgan has to say. That's what's important. Okay. So you got Goldman Sachs tomorrow morning before the open. But Tuesday is the big one because you got J.P. Morgan, BlackRock, Citibank, Wells Fargo. Okay. But J.P. Morgan, the CEO, really whatever he says is most important. He is the most important banking CEO out there. All right, whatever he says about the global economy, the U.S. economy, how he feels about the economy, that's going to affect things. So that's going to be Tuesday. But then Wednesday morning, we have ASML. ASML, the first semiconductor earnings, very important. Semiconductors is the one that's keeping the market from crashing right now. It's the sector that's went up the highest since the taco last week. So if this thing says bad things, So we have Morgan Stanley, Bank of America, okay, and we also have Progressive Insurance Company. So those are kind of important for the finance sector, but outside of ASML, they're probably not going to be that important. And then we have JP Hunt after the close on Wednesday. JP Hunt is trucking, so transportation. If you're kind of having to see how bad the economy is, looking at the trucking companies, there, whatever they say will be important. And then Thursday morning, early in the morning, so probably about 12 to 1 o'clock Eastern, so midnight to 1 o'clock a.m., they're going to report earnings in Taiwan. So very early in the morning on Thursday, TSMC will report. Okay? So ASML, Wednesday morning, then Thursday morning, TSMC. Those will be the most important ones. Then right after the close on Thursday, Netflix. So that'll be the first consumer discretionary kind of communications. So that'll affect WebL. WebL will definitely get affected by Netflix more than TSMC and ASML. And then you have Alcoa. So I'm going to be watching how Alcoa does for aluminum. That's going to be really important for aluminum. And yeah, that's all I'm going to be looking for. So those are the important earnings. Okay, guys, that's it. That's it. All right, anything else? Let me do the symbolic stuff. Let's do this one real quick. what else I gotta do for you guys? Anything else? Okay, let's see. Bitcoin right now, count number 7. Okay, yeah, I'm gonna be watching this because there's another stock I like is Hut. Hut, I had to get out in January because I was like, bro, you're just going sideways. I'd rather go to oil. So I took some of my money out and said, like, you know, it's just like, yeah, I had a good run from October, November, whatever. I think, yeah, November must have been here, or maybe it was December, because most of the Hut stuff was from April, May, and I rode it up into October. Then I got back in late. Yeah, it was just before Thanksgiving right here. Or maybe it was just before Christmas. I can't remember. One of these times when it was testing this area, I got back in. It's a nice stock, you know, because it does both the crypto side of it. So you kind of get that boost from Bitcoin if necessary. But even if Bitcoin isn't doing well, it has the AI stuff too. And it has the Trump glow, because Eric Trump or Trump Jr., I forgot which one of the Trump sons is invested and involved in this. So it's been going sideways, right, since January. It got boring. I said, like, I'd rather take that money and put it into UwU. It's better off there. Now, since April, okay, since late March into April, right now, 2 weeks of April, very good, very good. Since the taco went up even higher, so very nice. It's going to try to break this area at 65. All right. Now, if I look at the weekly, let's see, what's the weekly at? Let me look at the weekly. Okay. So this is where we want to target 71. What does it do at 71? So if we have problems with the Strait of Hormuz, I'm going to expect this to go back down. Okay. See where it goes back down. And that's when I'm going to think about buying it. So I'm looking for stocks like this and go like, okay, we're going to go back down in the market, but what price can I get this? Can I grab it this week and next week? So these 2 weeks, I'm looking for targets here for stocks like this, because I think this will go a lot higher. It's already like broken out of this, because this was a target for the wave. Okay, let me hide this thing. So you see this? 1, 2, 3. You hit this target. 4, 5. But guess what? We kept going. 5 is now up here. So once this is broken, this thing can go a lot higher. A lot higher. This is the last high up here in 2021 during that. So we might be able to get a little squeeze into June. Okay, we could just get like, oh, this could go up another 100% easy. You could trade this guy, no problem. So something like this, very strong with the Bitcoin. If Bitcoin really wants to break out now and go towards 80, 100, I'll be in Hut. And then when all the AI, those little stupid little software companies start going up, Hut will go up even more. So you got the software plus the Bitcoin together. If they go up together, Hut. That's it. This one is the one to be in. All right. Okay. So apart from that, yeah, I'll be looking at these things. Okay. So what else? Let's look at the other MVP stocks. Let's see. Which one do I like? Let's look at Deere and Caterpillar. I think those earnings will come up around pretty soon too. So we did a recovery here. Little test of that 550. That 550, you remember, is kind of like that. That was the target of the 3. You see that? So 1, 2, 3, 4, 5. We hit it. If this thing actually wants to go up higher, this 5 will move over here. Okay, this C will move over here, and we're gonna go up higher than this. So this 650 area is kind of where we're gonna get blocked again. But if this is a start of a new move up, let's see. It might not be though. This could just be going sideways into October. This might not go anywhere. We might not need to rush into this one. But let me wait and see. how it goes. Caterpillar looks a lot better, a lot stronger. It's already broken this thing here, and if you look at it, we're starting a move here. Caterpillar. So both Caterpillar and Deer. Deer, because the agriculture, there's a lot of farming that has to be done. There's going to be food scarcity. Definitely going to have a lot of that stuff. Caterpillar, because like there's going to be a lot of mining, a lot of more construction, especially with all the wars and decimation that's going on now. People are going to try to rebuild. So Caterpillar is pretty good at that. Also, Caterpillar and Deer also have technologies behind it. A lot of their tractors are hooked up to data centers. Okay, a lot of that stuff has data. They collect data from you. So if you buy a fancy new Deer or Caterpillar product, most likely those tractors and things are tied and connected to the data center, and they collect that data to sell. You know, they got the farming data, all that stuff. They will sell that data. Construction data, they'll sell it to somebody, and they make money off of that. So they're doing a good job. You know, those two companies. LNG. So liquefied natural gas company, big one, Cheniere. So it's been pulling back. So I want to see where it's going to pull back towards, and then I will recommend it because it's on its first wave. It's only on its first wave. Okay. We already started breaking out of this, so this has a long way to go. Cheniere can go a lot higher from here. All right. You can see how strong it moved since COVID into Ukraine and Russia, and then got stuck, went sideways, went a little bit higher from 2024, but not much. It got stuck sideways. Now we are starting a new trend up. This thing can go a lot higher if we are in the commodities world. So, yeah, okay. That's the kind of stuff we're going to be watching. So these type of stocks, definitely, for sure. Okay, anything else? No. I think you know what to do. WebL, okay. This is going to be the important one. And we'll see about the CrowdStrike and Palantir. Palantir is probably the one that I'm going to be very curious if it can hold that 150 area. If it's dropping below it, ooh, yeah, delicious. I'll be more serious about buying it. I did buy a little bit on Friday. Not really confident, but since it hit that level, that's going to be important. AIBU, yeah, WebL, you can hold it for sure. As far as like buying more, we'll have to wait and see. That's it. Time to sell Palantir? No, I'm here to buy Palantir. You should have sold it last year, man. It's time to buy it again. I shorted it a little bit. Like what? A month ago? 2 months ago? Maybe it was 3 months ago. I don't remember. But now I'm trying to see if there's a bottom here somewhere. But in any case, nothing you can hold too quickly as long as we get noise. Okay. Oh yeah, gold. Let me see. DDX. Oh, let me see. No, not here. What the hell? DDX. I don't personally. I think there's too many good things about gold right now that I'm seeing. Okay, like the Japanese bonds are still going up. Oh man, let me hold up. I did do something like maybe 2 days ago. Let me see if I have it. Let me show you this. There is some good things I see. I mean, but the problem is I'm just not in a rush to really say that gold is not going to go sideways for most of this year right now. But I do see good things. Of course, that could change, right? Everything can change with the Japanese central bank and the new Fed chair coming in May. So in 2 weeks, we'll have the last Jerome Powell speech, and then after that we'll get a new chair. But Jerome Powell will probably still be in the background trying to cock block because he's not leaving the Federal Reserve. Because usually if you get kicked out of the Fed chair position, you traditionally would say, all right, I'm done. See you guys. But he's going to stay in the Board of Governors. So he still has a vote. I think he just wants to stay there to piss off Trump, honestly. Like I said he was going to do something to piss off Trump, either raise interest rates and piss him off or do something else. And looks like he is doing that other thing where he's just going to stay there and try to annoy him. Because it seems that people think that a lot of people in the Federal Reserve still listen to Jerome Powell. So if the new guy comes in and Jerome Powell is kind of like doing stuff behind that guy's back in the Federal Reserve, then yeah, that'll be interesting. It'll be hard to predict, honestly, what's going to happen with the gold then. It's not going to be easy. Fuck. Well, gold, yeah. As far as silver is concerned, silver is like a well, it's an industrial metal too, you know, so I think that's going to depend a lot on how much the global industries are doing, mainly China, how much China is going to keep playing around with silver. I don't know about the other countries, how much influence they have. I think for silver, it's mostly China. We really have no idea. But the other thing is lithium. Lithium is going to do well. So for sure. We'll talk about that later in the week. So I think my picks are going to be good. It's SGML and what was it? SGML? Yeah, SGML. Let me look up SGML here. SGML. Let's see. Yeah. So next target is 24 for SGML. Okay. 1, 2, 3, 4, 5. Okay. Let's see, sequential here. Looks like it's starting to move. Yeah, it had a nice recovery from March 15th. Went to 9, went back up to 15 now. The thing about it is, like, you're going to have to suck it up because it moves so volatile. Like, it could go up and down 20% every other week. It's just like, you might feel like this is terrible thing to hold. But eventually, once it's done goofing off, it shoots up. Like here. So I was playing this one when it was like in 2021, going up until 2023. Somewhere, I probably got in somewhere $8, $7-8 here, around here. So I got up to 40. You know, it's going to go up a lot higher for sure, I think. Once it cracks 24, it's going to blow right through 40 and go up to 100 maybe. Who knows? We'll have to wait and see how far lithium can go. But yeah, this thing, because China stopped manipulating it back in September to November something. There was news that one of the large Chinese lithium producers was going to stop dumping lithium into the market because they were keeping the prices artificially low for most of last year. Yeah. And the other one was Argentina, right? Lithium Argentina, this one. So let's see. This one might even do better than SGML. So let's see if it can get through 13 first, and we'll go from there. So right now it's $7. So yeah, those are the two that I'm looking at. Yeah, those two. I don't know when you bought it. You're going to have to hold. You're probably going to have to hold. You're going to have to suck it up. You're going to have to suck it up. If you didn't sell, like, okay, when I bought it, it was like, what, $9, $8, $9. And then when I recommended it to people, it was 20. And then when it started getting towards 120, 150, I said, like, it's time to get out around there. Yeah. So there were better places to be, like semiconductors. Palantir wasn't really important to me anymore from that. But if Palantir is going to go down, it's going to go down to $60 or $80 if there's going to be a big crash coming soon around the corner in the market. If there's a big crash in the stock market, it's not going to stop Palantir from going that low. If it does go that low, okay, time to buy. That's for damn sure. But I'm not 100% certain we're going to get to that point yet. I think that's going to come around after June. I don't think we're going to have the big crash now. We're going to have some kind of problem sometime after June into October. Something's going to happen. Okay? Elections is around the corner, right? We got midterm elections. Somebody's going to make a move. Somebody's going to try to destroy Trump's whole political credit, his whole cachet or whatever aura. It's going to be gone by the time midterms comes around. So if the Iranians want to do something, if the Chinese want to do something, you know, if there's going to be an Israeli false flag, who knows, man? I have no idea. They're going to do it then. Okay, so I think I found it. Let's see. Let me see. Okay. Okay, I found one. What else? I found 2, and I found 3. Okay. All right. Okay, guys. Here. All right, I found them. All right. Okay. I was doing some thought experiments a couple days ago about currency markets. So this is the 10-year minus for the Japanese versus the US 10-year yield. Okay, so this is what this chart is. And then I was like, what's the correlation between that and semiconductors, gold, silver miners, gold, and silver? So far, it looks like there seems to be good correlation with semiconductors and gold, silver miners. So that's true for now, right? So I said, like, as long as this thing keeps going up, so if the Japanese yields keep outperforming the US yields, so that means Japanese bonds are crashing further than US bonds, then yeah, a chance. Gold has a chance to help stay up with silver, maybe. The miners are probably the ones that will benefit the most out of that, I think, for now. And then if we look here, so the Chinese yuan, okay, versus the dollars, because Samantha's like the Chinese yuan matches well with the silver, so we have to look at this for silver issues. I also noticed there's a heavy correlation between this, the Chinese yuan, and the Korean stock market. So there's definitely a big correlation between how the Chinese currency affects the Koreans, okay, right now. And that also, semiconductors also, because the Korean market matches well with the semiconductors too. So there is some correlation there. And then now this one, I put this one together. Euros versus Japanese yen. Okay, so this is how it looks right now. The euro versus Japanese yen. So the yen is getting very weak compared to the euro. Okay, that's why this is moving up. And let's see which one of these does it follow the best. It follows semiconductors the best. One thing that you should notice is that when we do the dollar versus the euro, when the euro versus the dollar started moving down, so that means the dollar was getting very weak to the euro at this point here in January. You could see like gold was like moving up a lot right at the same time before snapping back. I don't know. There's definitely something going on between the currencies, and that's why I don't like trading the gold stuff. too closely. Unless there's like an actual trend. If there's no trend, I don't like touching gold or trading gold because I think it has too much of a dependency on how currencies react, right? So you got the bond market, you got the currency market. If you don't understand the reason why this thing is happening and causing that thing to happen and this and that, because you have to look at the euro, the yen, the dollar, as well as, you know, probably European bonds, Japanese bonds, and US bonds all together. So you have a multi-dimensional matrix to figure out, yo, is gold really gonna go up? Is silver really gonna go up? If it's not easy, I don't play. Because here you could see from May to January, it was like going up nice and steady, right? On the euro, Japanese yen, on the yuan, US dollar, on the treasury, Japanese yield versus US yields. They were all going up nice and steady. But since then, we've got this like zigzag, zigzag down, zigzag up, sideways, blah, blah, blah. It's like, what? Nah, dude. I don't know what's going on now. Yeah, if you don't have this nice trend, I don't like to trust. I don't trust it. I don't know how high GDXU is going to go. Before you have to go to GDXD and go back down, right? You're going to have to go like, well, oh, this is the top. Short it. Oh, this is the bottom. Long. Oh, this is the top. Short it. If you can do that, you can make a lot of money because GDXU and GDXD go up and down very rapidly, right? You notice that. You notice that. It does a lot more than semiconductors. And outside of the Korean stock market, yeah, it's probably the best way to trade right now. If you can actually time the tops and bottoms anyhow. In next month, so I might have some downtime to help. Oh, okay. Cool. Yeah. That'll be great. Yeah, I need to come up with like a plan. Like, what do I need to show every other day? You know, like what's important, right? I don't think I should overwhelm you with all this stuff. It's like, man, this is too much information. Is it needed? No, it's not really needed. That's the question. Yeah, you don't really need that stuff. But okay, guys. So let's go back to the cycles here. See how much time I got left. Yeah, I got a little bit of time before I gotta go eat. So here we go with a cycle. Agartha and Yakub. You know, everything's a sine wave, okay? So you got your 3 sine waves right here. Let me take them away. So you got 1 sine wave here, another sine wave there, okay? And then you got another sine wave here, okay? So you got 3 sine waves, you add them together, and here's a cycle. And we see June. Sometime in June will be the top. Maybe even going into July, if this can last, right? But the problem is like, is this bottom gonna stick? It looks like it is, because if we look at the cyclic RSI here, the red line has gotten through the blue line very strong. The last time it was like zigzag, zigzag, zigzag before puke, and then now we got in. Okay, the last time we went below it was, guess what? Into the tariff stuff last year. And we stayed below before coming back up. This is one of the reasons why, you know, you're like, well, looks like that was the bottom. So sometime in late April, you were convinced that's the bottom. Are we convinced this is the bottom? If this is the bottom, it doesn't mean that it won't revisit this stuff. It might actually go back down and retest this bottom sometime before May, right? I don't know. So it's kind of hard for me to tell people, yo, you can buy up here, because we also know that 6,800 something in the S&P 500 is going to be the very hard to escape. Okay, that's kind of like the line where it's going to be blocked. You're going to be blocked up here, right? 68 something. I think Samantha right now thinks like maybe it can go up to 6,900 before it's like, no, we're not gonna go up. We're not gonna go up anymore. But that means earnings will matter a lot for that to happen, right? So we need help. But semiconductors is already flying up, and that's kind of the problem. Anyhow, okay. So yeah, it's really gonna be a challenge. Oh, but yeah, you got all these sine waves. We got that. Good. So hopefully you understand, okay? Hopefully you understand. We got 3 sine waves. 1, okay, 2, and 3. And then we all add it up. Okay, we all add it up. And we're going to see how it's going to be in June, right? That's it. And then that's April. Again, I told you. It was right here. We went below it. Very strong. And it took a while to get back up. I think, let me see. Another thing to talk about before, might as well talk about it again. Let me remind you guys, too, about this one. BNT. Okay, let me see. Hold up. Okay. Let's see this one. Okay, this one. This is my indicator here. So back in last April, last March, we had this drop here. Very big, very significant. Okay, we went here. This is the summation index. Okay, the NYSE summation index, McClellan oscillator, basically based system. So they're using this to figure out where it's going to be a bear market. So as long as it was below 0, practically below 0 for me, it's like pretty much a bear market. Okay, so that's why we're going to be looking at this line, and we'll be like, okay. Once it got above it, we're clear, right? We're clear. So we're about to cross that. Now, this could fake out and we go back down. If it does, then yeah, there could be a lot lower that we could go. That's the problem. Okay, so let me do the NASDAQ composite version of this. This is still a long ways from getting back to 0. So no, this is not even there yet. NASDAQ has been weak since November. So you see why we went sideways? It's like, dude, all the software companies was killing the NASDAQ. A lot of other smaller NASDAQ companies was killing everything. The NASDAQ actually has a lot of weak companies. Okay, they have a lot of weak companies. It's just not going to be easy to be bullish on this thing. Compared to NYSE, they have tons of trash, a lot of petty stocks too, full of garbage. So that's why it's going to be hard for this to see this one really recover. And then why bring this up? Because this signal here is based on the breadth of the market. So how strong all these stocks move up determines if I'm very confident that I don't need to do anything. This is why I didn't talk about anything anymore. This signal is the Zweig breadth thrust. So the very first stream I did this year, I mentioned this. I said, like, when you see this signal, from this point on, the market usually goes 20 to 25% on the S&P 500. So when this signal triggers, it goes up. From that point on, 20 to 25% over 1 year from this signal. So the last time it did that was 2023, and then 2025, right? April of 2025, November of 2023. And this signal is very rare. It's very hard to get this signal, actually. So for it to happen 2 times like this, very close to each other, this was a very good Very good point to make a lot of money. You were just like, turn off my brain, goes up 20-25%. Turn off my brain, goes up 20-25%. We already are at that yearly anniversary, right? Okay, you are up 20-25%, but I think it's probably about 20% right now. We already dropped a bit, so probably maybe 18-19% from this point. I don't know. I don't think this signal is going to trigger again. I just don't see it. We didn't go down deep enough. You see here? This is the Cohen high-low signal. Usually it drops below 0.1 or whatever. And then when it jumps back to 0.5, that's a good signal too. So we never even got to that point. We never got that low in the markets for breadth, meaning like all total stock market. If you just looked at software, sure, software looks terrible, but outside of software, oil went up, semiconductors stayed flat pretty much. Maybe some bank stocks kind of got hit a little bit, but not too bad. What else? Home construction, probably another sector that got beat up pretty badly from the Iran war, but very, very few. So it's not a broad crash, you know. It was kind of like a targeted crash. A lot of like maybe some sectors got beat up, but not everybody got beat up. So it's not going to be like, no, turn off your brain. It's going to go up 20% from no. Unless we get a big crash right now, but it's probably not going to happen. I think that's going to be in October. Okay, September, October, maybe even August. But right now, we're not going to have it. We're just going to have a little goofing off. Some sectors are going to go sideways, but software will try to recover. That's why I'm going to bet on software for 2 months to 3 months. Get that trade and then get out, and then wait for August to see if what I see, whoa, something looks wrong here, and then we're going to have a problem. So that's what you got to worry about, okay? We're not there yet. None of these things tell me like this is going to be a big deal. Like this is what's going to be a big deal. Here, whatever is going to happen from August down here, whatever this is, from what the cycle says, this is going to be the problem. This is just going to be a little recovery, no big deal. So even if this thing goes back down, it's like as long as you pick the right stocks to hide out in, something is going to push up. And I think software is the one that's going to push up. I'm not really 100% sure semiconductors is the one that's going to push up. That's my question. Semiconductors looks like it wants to break out, but I have a feeling it's a trap. I don't know. So all I can say is software for now looks better because the risk reward looks better. But it doesn't mean that it's not going to keep on crashing next week if Hormuz noise happens. So if Palantir goes down to 80 for some reason, I am definitely going to buy it. Okay? All right. I think you understand. I think you understand what's up. So let me put in Palantir right here for you. Okay. And let's look at it. Let's study this a little bit on the DeMark stuff here. Okay, so 66 is this support level. Okay, we see that on the weekly. So let me go to the daily. So let's see, how about this? This one is 80. That's the target. Say this C5 keeps going down. So this thing is not the real C5. Okay, this is not the finish. So because if you see the C5, it's usually like that's good sign to buy. But this C5 could still go lower. Okay, we're not sure if this is gonna be a completed C5. I need to see a 1 first to finish believing that this is over with. This could still go to 80. Yeah, so whatever you're doing in Palantir right now, be wary. You could still go to 80, maybe even 60. Okay, software might not be done. They might do more Anthropic, this and that, and they'll try to keep pushing this thing down before earnings. Okay. But that'll be the time to buy. So I'll be watching that. If you want to short this though, you're gonna take a risk. Yeah, you're gonna take a risk. Really pay attention because you can short it. There's inverse ETF, PLTZ, 2x leverage. So yeah, you can do PLTZ. Okay, you can try to short it. I don't know though. I mean, based on this, I guess 56 is the target from 36. I don't know. I don't know how much I put trust in this to happen. But yeah, you can try. You can make the attempt. All right. Let's look at semiconductors here. You see that? So I said basically 680. I'm watching 680. Tomorrow it's probably going to go down if the NASDAQ still wants to go down like quite a bit. So let's see if it holds 380. If it doesn't, maybe I'll short it. Okay, I can use SOXS. Because it's really cheap right now. It's 23. Yeah. Okay, 23, 24. Yeah, okay. Okay, yeah. I might pay attention to this. I don't know. Let's see what happens tomorrow, though. Okay, guys? What else? Agriculture. So let's look at some grains, right? I was talking about till. So I'm going to watch this one. And we'll put this in the Substack, too. If this thing gets down to 17 or 16, I'll buy it. So that's another boomer stock we can add to the list too. Okay, so this thing has the sugar cane. I think it has sugar. I think the problem is this thing has sugar cane. If it didn't have sugar cane, it wouldn't drop this badly. But sugar has been getting beaten up a lot since the Iran war. But otherwise, wheat, corn, soybeans, soy oil, whatever, I think they're okay. I think they're gonna go up. Sugar is a problem though, because this thing has sugar in the ETF. But the good thing about this ETF, it doesn't give you a K1 tax form, so that's why I recommend this. So, and I don't think you guys want to care about like worrying about corn or is corn better than soy, better than wheat? No, let's just do all of them and put them in the. If this thing didn't have sugar, it probably wouldn't have this problem here we're seeing. So that's kind of a downside. I don't want sugar in this thing. Sugar, I don't want the sugar. Why is sugar in this ETF? Get it out of there. So let's see what else it has. Till contains. So what other stuff does it have? Okay, ETF. Yeah, okay. Yeah, corn, wheat, soybean, sugar. Damn, the sugar. It's the sugar that's causing this. Ugh, man, fuck. Oh, nothing's perfect when you use ETFs. And I don't think any of you guys learn how to trade with futures. So you might as well use it. All right, guys? All right. Okay. Good. I think we're good here. All right. Since we have a little time, let me play another video. How about that? We can close this off with this one. Okay, let me do... Let's do some palladium, platinum. How about that?
Welcome to another episode of Cycles TV. Yeah, today we are discussing platinum and palladium, the metal, and there's a special reason to do so. First, we can learn from our previous analysis we did here on that channel. And this is a learning case, so where we can reveal how that analysis worked out. And second, there's an interesting cycles configuration setting up right now in Palladium. So that's why I want to spend some time on Palladium today.
from the mind of Lars von Tienen, the most advanced psychoanalysis, hot off the press.
Thanks for joining today. And before we get into the session, don't forget that we will be live in New York end of May. So if you're interested in joining the 3 days conference on psychoanalysis we are hosting, please reach out to cycles.org. You will find all details there on the 3 days conference, and it will be for sure an interesting get together of really interesting minds and people on site, person to person. So it was a great experience last year to be there. I will be there for sure, and I would recommend, if you're interested in cycles and really meet us at the foundation and around 100 other experts in that area, please consider joining us in New York end of May. So that's it for our conference. Now let's jump into the case for today, Palladium. And as I mentioned to you right in the beginning, we did an analysis on Palladium back here in June 2025. So we have 9 months of learning, so we can study the real case of how it worked out. That's the first topic why I want to jump in. And before we're doing that, let's just quickly review, and you can also make a note. I mean, you don't need to. I have that note here. But I just want to remind us what have been the important dominant cycles at that point in time. Yeah, so you know that those are listed in the upper right section. And just to have a note here, so 78 days was the first important dominant cycle. The second one had a length of 93 days, yeah, which can be seen as the second ranked cycle, and the third most important highlighted and activated cycle here is the cycle with a length of 134 days. So 3 important cycles we discussed in that episode. I mean, you can reach down, watch the full episode on why we selected those cycles. And by the way, we're always using the same procedure to select those cycles. So we always explain a very specific roadmap. It's a very objective way how to identify those cycles. And we use the same pattern in that episode to derive those 3 dominant cycles. And by that point, I mean, you see what we have talked about in June. Here's the June. We identified a possible upcoming top in Palladium, and then the next bottom here around in August. So that was our prediction around that point in time. So let's have that in mind now if we walk back now the previous 9 months, and then at the end have a dedicated view on what's the perspective today looking at Palladium. So let's open our chart first. So here I've prepared the data set with light blue. Yeah, you see the out of sample information. So we, as today, we have now all the data coming in from the past analysis. I took the point here back before we reached that previous high last year in July. Yeah, you remember we did the projection back in late June, and around June, about a possible upcoming top here and a possible bottom in August. Yeah, you might remember that was the prediction based on those 3 cycles at that point in time. So just looking at that projection, we projected around June, around this time here, the projection was close top here and then a bottom into August. So that was the projection. And I mean, it couldn't have been more on time and more precise that time. But that's not the point I want to make. So this is what we did last time. What I want to do now is let's revisit a little bit how those 3 cycles would have been worked out. If we look a little bit further into the data, which came in just after that. So let's reselect those 3 cycles here on the list. So we had the 134. It's not the exact same period here, so it's 140, which is that cycle. Then we had this 78 days, which is exactly the same cycle here with slightly adjusted starting point. And what was it? Yeah, 90, 93, 96. Yeah, those, let me zoom in here. So those 3 cycles have been exactly the same now going back 9 months. Yeah, so that's the 3 cycles. And what we see here is the exact forecast. Here, the potential top in June, beginning of July, and the drop into August. Yeah, so that was now a little bit zoomed out, but it was the same picture as you have seen here. Yeah, just zooming in. So the July into August drop based on those 3 cycles. So exactly the same what we are seeing here, the June to July high, and then the drop into the August period here. So what's now more interesting is we can even zoom in. Not only that short-term move has played out as expected, what's quite interesting, and that's also a very interesting observation I have very often when reviewing those composite cycle analysis, and not only that this move worked, and by the way, it also reminds us we don't do any projection in terms of price, magnitude or amplitude. So how high a possible top will go in terms of price, or how low an expected down move will move afterwards. This is what we don't project with our cycles. We are just focusing on timing, right? So even if there's a high gap in terms of price between amplitude and this top here, I mean, if we don't know what comes in advance here, yeah, so that's where the point of the analysis has been. Yeah, so we predicted this drop here into August, so we couldn't anticipate what happens afterwards. So from that price range, yeah, you see it here, that worked out into that period. So
all right, so you see, this is what we use the cycles for. Of course, this is not guaranteed. Cycles are not guaranteed because, you know, we're still doing advanced research in this. You have to remember, everybody who was doing cycles before were doing pencil and paper and they're incomplete data. Now we have all the data we want. We have tons of data. We could probably get very precise data of potato crops, cocoa beans, everything, right? I could just pay a fee to like Deere or whoever, and they can give me data, and I could just run this and through the analyzer, get cycles, do all this signal processing, blah blah blah. And you know, who knows, these guys will come up with an AI tool, whatever, eventually. So that's why I'm giving you this information for free, right? I'm paying for this crap to give you this
as
stuff.
a forward projection.
All right, so let's go forward here.
Backward projection, we see that the same 3 cycles play an important role. As of today, those 3 cycles worked almost like running on rails for that asset, and you now can see where we are at the current point of time in this cycles model. Now, I don't think it needs further explanation, and we can even now start to see if other cycles would make it different. Yeah, so for example, you could argue, okay, Lars, but here's also a cycle with a length of 92. I would argue against our rules that cycle would anyhow not qualify, because you see the stability is so low and there's even no prominent ranking in the spectrum, so there's really no reason to select the cycle with a length of 92. I mean, we could. Let's do that and let's see. And just see how the shape of the composite changes. Almost zero change in that, right?
All right, so if you see here, we got a bottom in palladium platinum right now, right? This was projected in April here. We are in April. We're going into May and June. So I don't know if how that will affect silver and gold or whatever. But yeah, palladium is probably more aggressive, platinum more aggressive than silver or gold. If it is going to go up into May and possibly June, then yeah, maybe GDXU can go up a lot higher. Okay, so food for thought. Food for thought for any of you guys still wanting to play GDXU. Okay, that's it. All right, what homosexual accent? Why do Europeans' accent sounds like convicted chesters, cheaters? I don't know. I don't know. You're gonna have to suffer. You don't like these accents? I can't help you. Sorry, but anyhow, okay, that's good. We got 2 hours. That's food for thought. You guys can think about it as we continue on. We'll have plenty to discuss tomorrow when the market opens and we see everybody screaming and yelling and whatever. So, okay, good night, folks. Sweet dreams. See how low it goes tomorrow. I'm looking to buy something, but I'm guessing there won't be anything fun for me to buy. I'm going to have to wait for most of the week to see if there's a bigger drop in store so I can say, yo, I can buy some CrowdStrike or whatever. Who knows? All right, see ya.